Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
As being a modest analyst who's been at this for 16 years, which is a lot longer than I anticipated in 2004. With the help of my colleagues and with the help of my Lord Jesus Christ, I am still here because last year I went through an unbelievable storm, and I came out, I wouldn't say I came out looking pretty, but I came out alive. And I got to tell you, I got an addiction. And I don't know, some people might think it's pretty bad, but I'm addicted to chocolate and ice cream. And you can see it in my fat little face.
Oh, you look good, man. You look
I got a fat little face. I'm a few pounds over what my playing weight, that's what I call it, my playing weight as a swimmer and biker. It's funny, you know, as the decades go, it's like the emphasis changes. In the 80s, that was my tennis decade.
Yeah.
In the 90s, it was my swimming decade. In the hundreds, it was my biking decade, and it continues to be my biking decade. With various injuries, and you know how it is when you get on in years. I'm now 68 years old, and I feel pretty spry. I feel pretty young. I'll tell you when I feel the oldest. This is kind of strange, but you know, people say, hey, Jim, you open up a lot. Yeah, okay, well, I can open up on this. It's kind of funny. I'm past 55, and therefore I've got this whole, you know, older gentleman's prostate issue. So today, I got up it was about 2 a.m., and the first steps out of the bed are not stable. It's, oh, whoa, that ankle. Let's get that ankle working. All right. Now the hips. Oy, let's get the hips work. Oh, and then I march off to the bathroom and take a leak. Get back to sleep pretty nicely. So, you know, that's a nightly ritual. And to me, the big issue is it 1 or 2 middle of the night visits to the bathroom? Last night was 1. Hallelujah. Okay, you know, we're getting on in years. I mean, I look at certain people and say, wow, I remember him back in 2005 and 6. He's aged. So have I. So have I. And you know, it gets a little bit more brutal. Oh, I remember that guy. Oh, he's out of business now, 8 years ago. Why is that? Wrong forecasts? Yeah. I give a lot of credit to my colleagues. I'm very honest about this. A couple of them have educated me on a regular basis. Rob Kirby helped me to understand what the derivatives were all about. 2 major types: credit default swaps, which act like a bond, corporate bond insurance contract. He taught me what the interest rate swap derivative is all about, and that contract. My Euro Raj taught me what the bond swap was, where hedge fund, this is very important. Many hundreds of hedge funds have been buying the treasury bonds and shorting the interest rate swap derivative and capturing the VIG, the differential. And it's sometimes not teeny tiny. So that is why the Fed opened their repo window to the hedge funds, because they were critical in grabbing, I would guess, like 20% of treasury bond issuance. They did it through their Wall Street bank financiers, They did it with their arbitrage, going long the treasury and short the credit default swap. Okay, so it gets extremely complicated. And you're far more adept at this, Chris. I'll give you credit because we were talking before the recording. You were rattling off certain things that got you all excited and, you know, hot and bothered, like, you know, like some sexy lady. And it was overlooking over your review of the data for the precious metals contracts. And what
Silver
did you
data
tell?
gets me hot. It's true.
What? Well, you know, everybody's got a hot button. Mine is actually things like the petrodollar. That gets me really hot. When it started dismantling 3 years ago, I thought, man, oh man, is this going to be exciting? Because it's going to kill the Arab petro industries. It's going to ruin the basis of the petrodollar, which has served for 40 years as a foundation for the U.S. dollar. Okay, that's what got me all. And the Belt and Road, got to admit, the Belt and Road Initiative, that got me really hot and bothered because I knew it was going to be a grand undermine to the dollar with de-dollarization. So we've each got our exciting areas. But why don't you, I mean, I'm not going to act like the host, but why don't you, you know, give a bit of an introduction for what you've been seeing the last week or more. Actually, it's a trend that's been present for a couple months, as far as I understand.
Yep.
And it means what we're seeing is a big, I'll give you the general, you fill in the blanks and the specifics. I see the forest well, you see the trees well, and I'm sure you see the forest too, but I don't see the trees really well. Why don't you describe what gets you all excited with the COMEX data?
Well, at least if you take the COMEX data on the surface of it, which, I mean, hey, who knows how accurate it actually is, but it shows stunning amounts of gold and silver being posted for delivery. Interestingly, right before we started, I mentioned that even I've seen it now, you can see it now in platinum and palladium too, where you have the last month or so, in June, we had record gold deliveries. And me and a bunch of other people who follow silver were waiting to see, well, what's going to happen silver in July. And to put it in perspective, Jim, I know you don't like numbers too much, but in just the first 3 days of this delivery period, there's 65 million ounces of COMEX silver being posted for delivery. And at that same time, 24 million ounces is reportedly added into SLV and the Silver Trust. So that's 90 million ounces. That's almost a tenth of the entire mine supply for the year in a market that was already, according to Silver Institute, in a deficit last year. So one caveat to throw in there, I actually talked with David Morgan about it the other day, and he said, well, he was kind of the school of thought, I'll believe it when I see the metal has left the building, and I think that's a good point. Although I did say to him, do you think it has at least been transferred over the imaginary line from one section to another? And he said, based on his interpretation, and I don't want to speak for him, but you know, that he thought that that was plausible. That, I mean, the reports are showing the metal for delivery, and I can't understand where all this metal is coming from. If people are, it's not like someone's selling SLV. So, you know, again, that's the thing with precious metals. Jim, you pointed out when we talked the other day, I mean, most of the data probably isn't clean. So that's really maybe that's the fun in sniffing around, but at least the numbers they present would indicate that a run on gold and silver has already begun.
Right, right. Well, when you mentioned the millions of ounces, I put it in context as you did for the annual mine global output. What I have a hard time with is how many contracts is that and what's normal, what's average. So here's something that I'm grabbing out of the Craig Hemke, AKA Turd Ferguson, the TF Metals report. He had an article a few days ago on the 30th, which was Tuesday. For the sake of current comparison, April saw 7,100 gold contracts delivered, and June saw only 2,500. Now for April, I'm sorry, is that correct? That's gold, but now I'm seeing, oh gosh, I have a hard time deciphering. We're basically seeing like 5 times the average, 4 to 5 times the average for the month. I didn't want to quote something. For delivery in April, it's 31,000 total delivery. I don't get that. It just said April is 7,100. Then it says April is 31,000. I don't get that.
April was 31,000. Then it went back down. Then June rather was the big one. So you had April was a delivery month. You had 31,000, and that was big. And yet you just topped that with 55,000 in June.
Okay, I'm sorry. I finally figured it out. Last year, April was 7,100.
Right.
This year, April is 31,000. And then it went down in May to 10,200. And then the blowout month for June of 55,000. So it's on the order of 10 times the average last year during this season. And then on the first day in July, we had 3,000. So it's already starting out like gangbusters out of the gate in July. Now that's just gold. I've got a saying, and I tell this to my clients, gold is going to break the door down and silver will fly through on horses. Now that's a meaningful comment. Silver cannot fly through the door, run through, uninhibited, unless gold breaks it down. Gold is the currency, silver is the metal. And I'm learning that silver is no longer a monetary metal. It's going to be the technology metal. Now, I am very psyched by the fact that these months are ramping up in a gigantic way. I admit that a lot of COT data, commitment of traders data, just kind of went over my head in the last several years. I got really tired back 10 years ago, 12 years ago, trying to decipher what the COT data was all about, only to find out a lot of it was corrupted. I've got one colleague, Rise, tells me that in the last several months, there's been a tremendous amount of movement from one side of the room to the other side of the room within the vaults. And it's basically one bank selling to another bank. It's one bank taking delivery, taking it off the hands of another troubled bank. And it gets very confusing. But what is not confusing, I believe, is the net total deliveries that we're seeing here. And it's off the chart. It's like 8 to 10 times what we had last year in volume. And let me explain a little bit of my understanding of what happened. It was about a year and a half ago, London decided that they were going to do an exchange for physical serious fraud. I have trouble sometimes with the right words in description. We all know that the shorting has been done at the paper level, naked shorting. Let's drive down the oil price. Let's dump a few thousand contracts in 15 seconds. There's no metal behind those contracts. There's no metal moved or even promised in a legitimate manner for those many, many contracts which affect the paper gold price and upset thousands of investors. So they wanted to complete the fraud with an equally fraudulent delivery to close out the shorts in London. They called it exchange for physical. It got a lot of flack, a lot of criticism. And what they ended up doing in London, this is my analogy, they ended up shooting themselves in the foot. And attracting a tremendous amount of attention because the deliveries that supposedly took place were on the order of annual output for gold mining globally. And it raised a lot of eyebrows. It caused a lot of attention in a very bad way. And what it did was it revealed in a kind of a final exclamation point their fraud. So they not only shot off their feet, they shot off their legs, they shot off their testicles. And the result was that they went around and said, well, we're going to have this new 400-ounce bar, and we're going to announce good delivery bar contract for it. And we're going to start this new contract, and it's going to, pick up the slack, and it's going to be like the savior of London's integrity. Oh, yeah, right. Well, the June deliveries were 8 contracts for this wonderful solution of theirs. Not 800, not 8,000, 8 contracts, less than 10. Grand failure, which it did more. It shoved a bunch of dirt on their integrity, which had been buried. Okay, so now we're starting to see what I'm starting to call the COVID era new gold deliveries, and silver's climbing on. And as you mentioned, platinum and palladium are climbing on. There's something important that people should know about platinum and palladium. They're not anywhere near as corrupted. So they offer not a fair price, but a closer to fair price. I am wicked psyched. That's a Boston expression. I am extremely psyched. I think we're going to break the COMEX this calendar year. I think it's going to happen in the next few months. We're starting to see the early indication. When you look at this data, Chris, does it not remind you of a building volcano?
Well, it sure does. In fact, while I was pulling up one of those pieces of data for you, real quick for folks at home, these blue bars show how much metal is being added into the silver trust each week. This week is 31 million ounces. To put that into perspective, though, that makes the amount of metal that reportedly went into the trust this week the largest in history.
Well,
at the same time, you're having record deliveries on the COMEX as well.
Let's describe what this fund is. This is the SLV Silver Fund.
And the other ones, so there's a couple of them, but
oh, okay. These are the major ETFs that operate with silver.
Yep. Okay,
how many of them are corrupt? Because SLV is corrupt. That's managed by Barclays, as I understand.
SLV, actually the custodian's JP Morgan, which is kind of special. I would trust the Sprott Silver Trust, but like you said, yeah, a lot of them are not,
They're not transparent. They don't deal with actual metal movement. You can't redeem shares to get metal. That's the case with SLV. I believe it was Barclays provided the silver, and now JP Morgan manages the fund. That's been the case now for over 10 years. Okay, that's for silver. All right, so now when all that silver goes into the fund, if that's SLV, that is to dump on the market. Is that not correct?
No, but essentially what those numbers are showing is that that's how much, and I've actually called one of the administrators for the SLV Trust. Now, they said to me on the phone, when new shares are added, physical silver goes in and backs it. I know there's a lot of debate there, and that's not how I would store my metal, but that's at least the concept that they are advertising to investors. So that means metal is demanded in there. Theoretically, you have to find silver somewhere. And you've had about 300 million ounces added in a year in a market that's in a deficit. There's only about 900 million or 1 billion ounces mined a year. Now half the mines are shut down, so it's a mystery where it's coming from.
Well, I'm not in a mystery of where it's coming from, and I'm not in a mystery on seeing the bar grow. What I am emphasizing is that the SLV fund has been used to dump on the market and keep the price down. Just like the GLD fund, the SPDR Gold Trust, the SPDR Gold Trust, GLD. You cannot redeem share for gold. You cannot say, well, I've got 10,000 shares, I want my gold. They'll say, back off, you're not a club member. We're busy, go away. And in the night, they're dumping that gold on the market. SLV dumps the gold on the market. Sprott is not like that. Sprott is honest. You can go redeem your shares with silver. You can go redeem, that's PSLV for Sprott. You can redeem your gold shares with gold bars at PHYS for physical gold at the Sprott Fund. The Sprott Fund is super and full of integrity. The SLV and GLD are really badly corrupt, and they dump on the market. So if the majority of that silver blue bar, Chris, is from SLV, that will keep the price down. That's my point.
That's certainly one possibility.
Yes. Now, okay, sure, new shares come into being, so they back it up with the actual metal. But you've got enormous shareholders who are the big banks, and they dump their shares and dump their metal after new shares are created and new metal comes in. This is a revolving door to dump on the market, and I'd like to see SLV shut down. I'd like to see GLD shut down, but they're favorite children of the banker cabal, and they've been critically important in keeping the price down. Okay, what I'm excited by is that the deliveries are now just getting out of sight, and it's going to overwhelm the corrupt market, and they're not going to be able to do their usual exchange for physical corrupt nonsense because the spotlight is on them. They've attracted attention. They've closed the loop with a fraudulent naked short, now a fraudulent delivery. Everybody's watching. And my Maxwell in Central Europe told me in early May that there are lawsuits lined up against the COMEX, and it's already basically shut down, and they're pretending to have operations. So when you look at that data, Chris, is that from COMEX or is that LBMA?
The deliveries we talked about before were from the COMEX. The SLV stuff is obviously for the SLV. Although interesting, you mentioned the LBMA because I talked with Rick Rule yesterday, and I asked him where he thought all the silver was coming from, and I think he's qualified, especially running those trusts. And he said it was coming from the LBMA. He said they've been taking delivery, I think he said $50 million of metal per day, although I think that included gold and silver. But when I asked him where is it coming from, he said it's coming from the LBMA.
The LBMA. And where is the LBMA getting it?
I mean, I've had Andrew McGuire on who says that he can't get wholesale bars because refineries have switched over to produce gold. This was maybe beginning of June. He sends me a message saying, we thought we were going to get our bars in July. Now that the refineries are switching to gold, we don't know when. So, doesn't sound like an ideal situation at the LBMA. And again, you don't really know because it's a whole black box. And although I'm sure did you catch that they got Dominique Strauss-Kahn's, one of his relatives, to replace the JP Morgan guy in the LBMA board who got booted out. So it's really a nice executive board of directors there to make you feel comfortable that you're getting honest information. And in fact, even yesterday I saw on the COMEX data, they even say you shouldn't rely on it. They had a disclaimer saying we can't verify the data. So, I mean, I think
well, they made a new category about 3 months ago or 4 months ago. You've got the registered, you got the eligible, and now you got the pledged. Okay, pledge, there's a better word for pledge. It's called bullshit. Pledge would be like, well, you know, JP Morgan's got a brother-in-law who's got a friend who's got a little vault in upstate New York, and he's pledging it in case you really need it. So let's put it on the data to make it all look good. It's called painting the data. Okay, I don't believe pledged for a minute. Another interpretation of pledged is, well, we've got a bullion bank in Switzerland, and they're buddies of ours, and they've agreed to steal a lot of gold bars, and let's just call that pledged. Okay, that's what pledged is. It's 5 arms lengths away or stolen. So let's put it on the data. Okay, here's some of my interpretation regarding the COVID factor for, again, not a virus project. The COVID factor with respect to the refineries. They shut down. And I don't really have a good reason why. I heard what they said, you know, for protection of our workers. But it could be in service to the white knights, the light forces, and the patriots. It could be that they were trying to curry favor to the patriots who have a plan for gold to be the foundation in the next chapter after the reset. That's my theory. That's my belief. And you know, you can't say, well, these refineries are all dirty, they're all corrupt. I don't think so. I think they're trying to play both sides, and they really don't know who's going to win. But if they have any brain power, they can see that the middle layers of the cabal have been wiped out in the last 5 years. So you're left with the elites, and you're left with the foot soldiers. You don't have the commanding officers, the captains, colonels to run things, to actually, you know, run full speed with a big project. They're very, very short on that kind of staff. So what that shutdown of the Swiss refineries did was it caused some severe logistics problems for the COMEX. And what Maxwell in Europe told me was that pretty much destroyed the COMEX. It was an unintended consequence. They could say that they were concerned about, you know, the virus in spreading with their workers at the refineries. But, you know, that doesn't wash, because I got news for you. The refineries are typically quite hot. They're elevated temperatures. The workers have to endure higher temperatures throughout the foundry, throughout the operations. Viruses do not like heat. So when I read that story, I thought, bullshit. Okay, you know, you got to use your head. You got to listen to a reason, a factor, an excuse, a story, and you have to say, that doesn't wash. Doesn't make sense with respect to the temperature limitations on viruses. You know, we weren't even in March when I heard that your hair dryer could kill viruses because it's sufficiently hot. We're not talking about boiling hot. We're just talking about hot.
Actually, it looks like your gold forecast, you had a 4th of July gold forecast you told me a couple days ago, and it looks like you missed by $1. You had 1776 for the gold price. Would you like to comment on that?
Well, let's round it up. 1775.4, I think, rounded up to 1776. Okay, what I heard was that there was going to be an effort by the Patriots to paint the tape of gold at 1776 and silver at 17.76, and I think silver is not a good deal above it, but it's got an 18 handle if I'm not mistaken. Is that correct?
Yeah, and again, there's different price feeds. Maybe Kitco not the most accurate one, but they're showing 18, quarter higher, so close.
Yeah.
Although interesting, you look at that spike down there in the red, Looks like yesterday it got down almost to exactly 1776.
Yeah.
So.
They went down near 1776 for a cup of coffee and then decided, nah, let gold make the statement. So the statement went like this: 4th of July, let's celebrate the independence of 1776, the year, by painting the gold tape at that number. And, you know, give them credit. I'd like to see it move much, much higher. I'm not always angry. I got to tell you that, Chris. I'm usually, you know, beaten up by events, but I'm angry whenever I get to the gold corruption, because right now what they're doing is they're dissuading. That means persuade against. They're dissuading the typical retail investor from buying and investing in the true safe haven. Gold is a safe haven. You used to say, well, you know, it's treasury bonds, but they went instantly to zero. And you may not think of it this way, but one of the consequences of going instantly to zero with that sudden jump down, the big rate cut, what was it, about 7 months ago? Big rate cut by the Fed down to zero flat. Well, what do? They basically took away the safe haven. People don't think in those terms. I looked to see, well, what are they doing there? Well, they're making the stimulus, and they're making the bond redemption, and they're giving a profit to the Wall Street holders. They're giving a profit to the pension and insurance holders. What else are they doing? Well, they're taking away the safe haven because it's going to be stuck near zero. There's no more game in the bond town. The bond casino is closed. Game over, 0%. But then you could say, well, you know, we might go the way of Germany and head toward minus 0.6, where there would be principal gains. But the principal gains are offset by quarterly payouts of the negative rate. Okay, you know, it gets really, really silly. But I'm encouraged by what I see, because I just posted an article yesterday with 10 reasons why gold is going to rise. And I can read, I'm not going to read you the justifications, okay? I'm just going to rattle them off. Is that all right? Is that all right?
Yep.
Okay, I got to wait for the window to come up. It gets a lot of eaten bandwidth. Here it goes. It's loading. The first one is very important. I remember when I started the newsletter, a point that I had made, a factor that I had given emphasis for the gold market, for powering demand in the gold market, was a negative real rate of interest, which means you take the official Fed funds rate, you subtract the consumer price inflation. Okay, so let's just say we've got some areas with shortages and higher prices, and we got other areas with liquidation and lower prices. It has to do with necessities versus non-necessities. Let's just say we got 6% price inflation in the United States. I think it's a little higher than that. Well, at the zero official rate, that means the real rate of interest for the U.S. Treasury, or for the dollar, or for your savings, is -6. You've got corrosive negative. Okay, that's reason number one. Second reason, I'll rattle them off more. That is the most important one. There's no safe place to put your money. If you put it in a bond, you're not going to get anything for it on interest, and you're going to lose on inflation. Second reason, staggering monetary growth has ruined money. Look at all the money supply growth. It is just enormous how much it's gone up in the last several months. Number three, trust has gone along with prestige for the king dollar. Ever since 9/11 rather, ever since 9/11. We're now pretty much a predatory nation. We don't give back the gold. We're a predatory nation. We seek endless war. It's just really quite sickening. Number four, Western economies are dependent upon central banks. They call it stimulus. It's really relief and welfare. It's a paycheck protection plan, and I'm struggling to get mine. I found out that I'm eligible, but my bank is swamped with applications, and you can only do it through your primary bank, which is really not right. Okay, so Western economies are dependent on central bank funding, along with, say, corporate bonds for the funding, along with exchange-traded funds for the funding. Okay, number 5, all US dollar-based bonds and exchange-traded funds are being redeemed. It's like ollie in free, calling all US dollar-based bonds, call them into the United States and redeem them with cash. So countries like South Korea, who might redeem 20 billion in a given month, are given dollar cash, and it's up to them to do something with it. I think they're buying gold bars for their reserves. You've talked about how the gold supply is way down for the retail market. That's something that we all observe. I am thinking, I don't have direct confirmation of this, but I'm thinking that whatever gold supply is out there is made available for central banks so they can load up and you cannot. Number 6, the mining sector is stalled with many shutdowns. It's not just Mexico, Peru, and Ecuador, the big silver producers. Russia's announced that they've shut down some silver mines. South Africa has shut down Anglo Gold, which is a gold producer. Okay. Number 7, central bank reserves are converting from bonds to gold. I just mentioned how. All the bonds are called home to the United States. The Fed redeems them. They get cash back, and they better use it prudently, or else their cash is going to be suffering from corrosion due to inflation. Okay, number 8, digital currencies are evolving toward gold backing. First comes the rules and the usage, where they're going to use it regionally. Maybe, install a gold trade note within the blockchain, and later we will see gold integrated like with the gold trade note. First, you got to get the rules and usage straight. We're starting to see it. Several countries now are announcing theirs. Number 9, chaos is building on a worldwide basis. I have never understood the whole concept of having the police stand down. If you say, here we are, Minneapolis, our police, we are going to stand down, I think the governor and the mayor are liable for damage to businesses because it's a license to burn and loot. And I think the mayor will find soon enough that he or she is liable. And we're going to start seeing an end to this practice. Number 10, almost all assets are turning to worthless drivel. Stocks, bonds, real estate, mining deposits, oil deposits, you name it. They're all going down in value. What I have heard from Maxwell is something that's very astute and very deep. He told me in May, Jim, you've got the globalist fascists trying to drive down every market. They're trying to drive down the stocks. They're trying to drive down property. They're trying to drive everything down, but maybe not bonds. Let them go to zero and stay there. Let them go to zero and bore the hell out of everybody so nobody cares about them anymore. Just the big banks are playing with bonds. But drive the stock market down. He said that is principally it, because a lot of people in the population, general population, own mutual funds and various other funds that are invested in stocks, and so do pension funds. But he said they're trying to push it down while the white hats, the patriots, are using the funny money, admittedly funny money, and pumping it into the stock market. So you see, like an end of day, oh my gosh, the stock market, the Dow is up 420 points in the last 40 minutes. How does that happen? It's the white hats, the good guys, not the evil. The good guys have ordered a Wall Street bank or JP Morgan through the Exchange Stabilization Fund, order them to buy it and lift it back up.
Yep.
Okay, so this is what's going on. The globalists fascists are pushing things down, and the patriots and white hats are pushing things up. What I think is going on, and Maxwell confirmed this. By the way, I should say, he's got a friend from a Swiss bank, just from old fraternity days, and that friend attends a weekly conference of over 100 different bank executives sponsored by the Euro Central Bank. They've been doing that since February or so. They're managing the transition. They're letting the people know. And this is the ugly consequence. They're giving them the insider word so they can have insider trading and profit from the transition, whereas we can't. But what Maxwell said was they're going to do their dead level best to preserve the value of assets before and during the transition to the reset, so that we don't wake up one day and the stock market is at zero and everyone we know is bankrupt. We don't want that. And here's a funny little twist that I'd like to close on. The white hats have to do something regarding military pensions. Why is that? Because the military is running these cleanup operations. You can't have the military pension be declared zero and expect that loyal, diligent, strong-backed Marine to do his job.
Yep.
So they have to protect the military pensions. They're going to have to protect a large swath for the transition. And they've decided they're going to protect the stock market and mutual funds. What I'm hearing is at risk is the pension funds. I don't know how that's going to work out.